Hi guys. So today the latest non-performing loan data has came out and it is really not very good. A non-performing loan is a bad loan, meaning a loan where the borrower is likely to default on their payment obligations and the lender is likely to experience losses. We all know that the banks have been trying to downplay how much stress is out there right now. So many people overpaid in a COVID FOMO madness, and things are not going to go well for them. The banks have been bending over backwards to try and appease the RBNZ, purely in repayment for the seriously dodgy FLP or funding for lending program that the RBNZ did for the banks during COVID. So the banks have been offering extended loan periods and interest-only loans, and this is still not enough for so many struggling borrowers. And obviously, if you've been watching this channel, you'll know that I've got zero sympathy for any property investors who got caught up in this disaster because their greed helped create it. They did not need a place to lay their heads like many first home buyers did, yet these parasites bid against and beat young people, which pushed house prices to the moon. These people deserve everything they get. However, the first time buyers who got caught up in this, who are about to lose everything, should actually consider a class action lawsuit against the many spruikers who talked up the Ponzi whilst pretending to be independent. Now we all know who they are, and the RBNZ leaders who set this whole disaster in motion also should be held to account. There is no way that they should be allowed to destroy the country and just walk away with an enormous pension and zero consequences. It's just not fair. So here is today's table showing the danger lurking in the New Zealand banking system. So this is from today's 30th of May RBNZ release. Looking at total loans, which includes housing loans, personal consumer loans, business loans, agriculture loans, dairy loans, commercial property loans, etc., it's clear that the total non-performing loans are increasing. In fact, total non-performing loans in April 2025 accounted for $4.424 billion, whereas in April 2023 that figure was $2.546 billion. And just look at how much the housing loans component of these total loans are. In April 2025, non-performing housing loans account for $2.42 billion, compared to the April 2023 figure of $1.105 billion, which is bad enough. Now, commercial property loans are faring very badly too. In April 2025, non-performing commercial property loans accounted for $366 million, compared to the April 2023 figure of $139 million. Now, I'll put a link in the description for the whole set of data. But I think it's clear to all of us now that this is very bad news for the banks. And once again, if you've been following this channel, you'll know that the New Zealand housing market is in a downward spiral with no obvious chance of levelling off or increasing without a massive immigration push, a renewal of foreign buyers, or a crash of the official cash rate, none of which look likely to happen anytime soon. So if prices do continue dropping, these bad loans will become even more risky, as more and more houses will be falling into negative equity, meaning that if the banks do have to repossess the homes and try and sell them as a mortgagee sale, the banks will start suffering snowballing losses. And compounding all of this, young Kiwis have had enough being used as fodder for the Ponzi and are fleeing New Zealand at an alarming rate, and without a crash in house prices this will continue. And everyone knows, without more willing young victims, all Ponzi's eventually crash back down to earth. So what can actually be done at this point to stop this rot? And you know what? I really don't know. There are no good options at this point, only least bad options. Personally, I will be doing everything to keep young Kiwis in the country, and the only way to do this is a major crash in house prices. And besides keeping all these young Kiwis here who are going to be taxpayers of the future, this would have so many other positive side effects too. As rents would drop, investors would bail, more people could afford to buy instead of renting, and the need for tax-devouring accommodation supplement could finally be done away with, along with the insane tax break awarded to landlords who pretend like they are any other business. Don't make me laugh. Unfortunately, it's obvious any crash will put stress on the over-leveraged and as a result, the banks. But perhaps they should not have fed the Ponzi in the first place. What do you think? Now, I did a video yesterday showing the banks once again boosting subprime lending to try and reignite the Ponzi. So I think at this point maybe it's time that they did actually learn the hard way. Now, the serious downside to the banks learning the hard way could mean every depositor also suffers. Now, New Zealand is a bit of a basket case if you didn't know when it comes to depositor guarantees. And I will go into that in more detail at a later date. But if you want to do a bit of research for yourself now, Google OBR and DCS. And if you've got a big massive deposit in the banks, maybe sit down before you look these things up. So guys, I'm going to keep watching this whole bad bank governance man-made national disaster unfold. So please like and subscribe to be kept in the loop. And thanks for watching, guys. And don't forget, for anyone who's interested in Australia news, I've got an Australian channel, Pigeon Post Australia, look it up. So cheers guys, thanks for watching, I'll see you all in the next one.